We have with us Rajesh Prasad, Director Finance at RVNL, joining in on the show right now. Rajesh, great to have you today on ET Now. Thanks for taking the time out. Just wanted to understand how the quarter gone by was, because from what we understand is, while it was steady on a yearly basis, a little soft on a sequential basis, quarter on quarter that is. Tell me, what are the revenue as well as, margin targets that you may have set out for the full year?
Okay. So very good morning to all of you. Thank you. I'll make a small correction. I'm Director Operations. Director Finance is having some engagement, so he is not here today. Anyway, so the question which you have asked about the quarter and then the whole year's performance and the future way forward. So last year in FY 22-23, if you recall, for the first time we crossed the turnover of the top line of 20,000 crores. The bottom line was also all-time high. The commissioning was also all-time high. And this quarter, this Q1, if you recall, we had a turnover of more than 5,400 crores, an increase of around 17%. And the bottom line also increased by 18%. What I wanted to tell you is that Q1, this is the all-time high. This Q1 of RVNL, this is all-time high. So whatever we have been doing, we are moving forward. We are getting a lot of success. And regarding this FY 23-24, the top line would be around 21,000 plus. The bottom line last financial year, we had around 1270 CR. This year, we will definitely cross the 1400 crore mark. And see, this is a government company. We have molded ourselves into the business development and taking the projects from the market. A lot of challenges were there. And the margin which you have asked, this quarter, we had the turnover, the margin upon turnover was around 5.92%. It is again one of the highest. And in time to come, since we are going in the bidding system and we are taking a lot of markets, and with the way we have been working and the kind of efficiencies we are having, we are 100% sure that the margin is likely to improve.
Okay. Why do you think margins will improve? Because it is not that the private sector business will come at a very high margin. If anything is coming through competitive bidding, it's not going to be like a 30% margin or 40% margin.
I'm not saying 30% or 40% margin. Nikunji, you please kindly appreciate few things. In RVNL model, we have got the margins on the projects which we have got on the nomination basis, number one. We have got some balances in the banks, so we get the interest. We are executing some deposit works, so we get the money in advance. We are getting the dividends from the SPVs. We have commissioned 5 number of special purpose vehicles. And these 5 number of special purpose vehicles have generated revenue to the extent of 1 lakh crore to the Ministry of Railways. So what I want to tell you is that these are the models. And since we are in the market, and the kind of efficiency, we are very new in this particular field. We got the first project in the month of October, November 2021. So it is not even 2 years. And we have already bagged more than 30,000 crores of projects from the market. We have a lot of plans to further enlarge and enhance the efficiency of this bidding cell. We have got the business development cell, design cell, legal cell. We have already opened the procurement cell. So what I wanted to tell you is that when you bring the efficiency in the system, the value addition, value engineering, then automatically these factors take into the factors, and the margin improves. And we don't eye the margins of 30%, 40%. What we want to have is that we should have the sufficient orders, number one. We should have the bottom line growing with the same kind of percentages. The investors are also very keen for the bottom line. And see, the infrastructure creation is also linked to so many other factors. We are a government sector where the government is having a share of 72.84%. The infrastructure creation is linked to the social justice, social requirements, ease of living, then ease of business. Then it is required for the overall growth of the economy and the country. So for a public sector, we are not considering margin which are in terms of the numbers, but also in terms of other intangible factors which I have just now said.
That when it comes to your overall margin picture, You have been as well at the receiving end of a number of orders, the Chennai Metro Rail, etc. When will revenue from this kick in? What is your total order book position right now, and how do you plan to grow it?
So, madam, see, as on date, the order book is around 65,000 crores plus. Out of that, 35,000 crores is through the nomination basis, and 30,000 crores through the bidding. Sorry, we have participated in bids to the extent of around 175 numbers, approximately 95,000 to 1 lakh crores. We have got the orders worth 30,000 crores. So the strike rate is, some of the bids are yet to be finalized. So the strike rate is more than 30%. And our basically focused areas is the railway infrastructures, the metro segments, and turnkey projects. And for the foreign projects, the neighboring countries like Bangladesh, Sri Lanka, Maldives, Mauritius, African continents, where we have got the assured funding of LOC, World Bank, ADB, JICA, and African, some other AFDB. So what I want to tell you is that we have got a lot of plans for expanding our business, and we have got plenty of works. Now you asked about the Chennai Metro. We have got 4 packages of Chennai Metro. The elevated metro corridor is on track. We have already established the casting yard. The piling activities have started. The casting yard is almost ready. Then the underground metro projects, recently we have got 3 packages. A lot of challenges are there. So your question is about when are we going to get this revenue out of these projects. In FY 23-24 we will have the revenue. What exactly will be the revenue, that we have already worked out. We have got a plan for that, but the revenue will definitely get reflected in FY 23-24.
Thank you for joining us. 3 hours